It is day 2 of our boot camp, and I'm excited to see you guys yet again. Today, we are covering candlesticks and chart patterns. And I'm telling you guys right now, whether you think you understand candlesticks and chart patterns or you know you don't, this video is going to have insane value. I personally do believe that I have a little bit different of a perspective on candlesticks and chart patterns than most. And I really do think that it is going to bring a lot of value and honestly, a second opinion to your current strategies. Now, we're going to be breaking down everything from what candlesticks are, what a bullish and a bearish candlestick is. We're seriously going to start at the base. We are going to build this foundation within this video. And at the end of this video, you guys will understand what candles are, how to tell a story with candles. And I'm telling you, you have no clue what I'm saying right now, but there is a true story that is being told through these candlesticks. And once you are able to learn and read that story, you are going to be just a completely different trader. I'm telling you right now, it is one of those things that has completely changed my trading game for the better, of course, and I'm very, very excited to share it with you. Now, we're also going to be covering some chart patterns, some things that you are going to see very often within the markets, things like those bullish flags, those wedging patterns, things like the cup and handle strategy, which you guys know I love and use very dearly. So I don't want to waste any more time. As always, make sure you guys do drop a like and subscribe. Our goal of 50 likes was absolutely smashed yesterday. We actually hit over 100 likes. So because we doubled that, I went ahead and doubled the giveaway. I want to congratulate Armstrong and Mr. Jack for winning our free evals. I'm giving away 2 free evals for you guys, and I'm willing to do it again if we're able to get 75 likes on this video. Now, I also did have a little bit of a surprise. I doubled our free premium memberships as well. I gave away 2 free months of premium to my boy Frontier and Radio Barry. So congratulations, guys. Make sure you guys hit me up if you haven't already, and I'll get you guys all set up with those evals and that free month of premium. But if you want to enter our next giveaway and you want to help us get to 75 likes on this video so we can get that giveaway, make sure you guys do, of course, drop a like, subscribe, and click the link in the description down below. Join up on our free Discord, join up on our live tomorrow, and you guys have just as good of a chance as anyone to win our giveaway. I'm done yapping. Let's go ahead and jump right into this video about candlesticks, 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 candlestick. Unfortunately, I'm going to have to put captions on this next section. The audio kind of cuts out for some reason, and I don't know how to fix it, so I do apologize, but let's jump into it. Okay, so I definitely didn't just film this entire video and then realize that the audio was off, but, I got a little bit of practice in, so now I know what I'm going to say, okay? Now, first of all, we need to understand what our candles are. So I have a bullish candle right here in green and a bearish candle right here in red. We need to first understand what our open, high, low, close is. Now, if you don't know what that is, we're going to be marking it out. So with a bullish candle, that means that the candle moved up during that candle and closed higher than it opened. So you are going to know that the body of this candle, and this is your body right here, body, this area right here is your wick. Obviously, down here is the wick as well. But you want to identify the body, then you want to identify the 2 wicks or 1 wick or no wick. You guys can see sometimes you're going to have a wick at the bottom and not at the top, and sometimes you're going to have a wick at the top and not the bottom. That is fine. But we want to understand what the body is and what the wick is so we know the difference. Now, like I said, with a bullish candle, you are closing higher than you open. So we know that the open of this candle is at the bottom of this body. So this is where that candle opened. Now we know, where did this candle close? At the high of this body. So we can find our close. Now, what do the wicks tell us? This is very, very important. And like I said, with the storytelling aspect of candlesticks, this is very, very important. Now, we are going to have a high up here. This is our wick high, okay? And this is our wick low. So in this candle, this is what it is telling us. This is the story aspect behind these candles. So we opened right here. We can see at one point sellers were in demand or were taking control. Okay, we sold down to this low, creating this wick. Okay, so at one point, this candle looked something like this candle. At one point, or realistically, that candle. At one point during that candle, we sold off and we were red. Okay, then we came back up and created this high, and then came back down a little bit to create this close. Okay, so the story behind this is the fact that we saw sellers come in, or even if we went up and created this high and then came down to create the low and then came all the way back up to close, either way, understanding that there's a bit of indecision within this candle because we are seeing we sold down, then we got bought up, and this is obviously why watching the candles is going to help, because if you see that we go down then get bought up like this, that is very bullish. But if you see that we go up, then get sold back down, then come back up, there's some indecision there. So it's very, very, very important to start to understand that kind of stuff. And of course, I'm going to make it make more sense a little bit. But I do want to first break down the bearish candle as well because it's the complete opposite. Okay, so like we said with the bullish candle, we know that we open and we end up closing higher because it's a bullish candle. Well, for a bearish candle, we know that we open and end up closing lower because it's a bearish candle. Okay, so we know that this is our body and this is our open right here. We also know that this is our close. Now, what's the difference of the bullish candle and the bearish candle? It's complete opposite. So we know this is our high and this is our low of this candle. And this one is telling you much of the same. We could have came up, and at one point, we could have had a candle that looked something like this, okay? Or we could have had a candle that looked something like this, or whatever it's going to be. But at the end of the day, we came up, we made this high, we were green at some point. This candle was green. Then we sell off, coming all the way back down to these lows, and then we come up just a little bit to create that close, okay? So one more example here, and I want to show you guys what it looks like when there's not a wick, because you're not always going to get a wick. So let's say we have a bearish candle that looks something like this, okay? Let's just say this is our bearish candle right here, okay? So where are we going to establish our open, high, low, close, okay? Well, we know that this is our high. We know that that's our high, right? That's easy. We also know that this is our open. That's easy. Now, what happens here? Because we don't have a close or a low. Well, we do have a close and we do have a low. It's the same thing. So this is our close low, okay? Close, there's no wick. So this is a great example of a very bearish candle because we came up, okay, we came up at some point in this candle and we were bullish, maybe looking something like that. Then what? Well, we sell all the way off to the point where buyers aren't able to buy this candle back up at all. See, this candle right here, buyers are able to buy this candle off of the low back up to the close, but it wasn't able to happen right here. So that could be an idea for you on this is a little bit more bearish than this candle, even though they're both bearish candles, right? So I want to now move over here and break down what it looks like from a scale of least bullish to most bullish, okay? And then least bearish to most bearish, okay? So from least bullish to most bullish, these are what your candles will look like because we know with our storytelling here, what happened on a candle like this? We saw us push all the way up, okay? Buyers were in demand or in control. Then what happened towards the end of this candle? Well, sellers came in control and shot us all the way back down. So it's still a green candle, but it's not as bullish as it could be. Okay. I'm going to jump over here to this candle first or next before we do talk about the rest, but this would be the complete opposite. So you can see we sold off at the beginning of this candle. Then buyers stepped in and bought us up towards the end, and we don't have a high. Okay. So we just have our close high, and that is a very good indicator to you that that buying pressure will or most likely will continue. Of course, it's not going to happen every single time, but that is a good idea that buyers are stepping back in demand because sellers weren't able to sell it back down, creating that true high. So I hope that makes a lot of sense. That is something that I would definitely recommend you guys writing down your notebook. Make a little diagram of this and then make a little diagram of this, put it in your notebook, and just understand kind of what the thought process is behind that. So like I said, we can have a candle that originally, I gotta use an damn t-shirt too. Go back and take a screenshot of that if you need it. Go back and take a screenshot of that. But let's say we have a candle that looks like this. Okay. Let's say we have a candle that looks like this, right? Well, say this is a 5-minute candle, right? Say this is a 5-minute candle, and say that we are in the third minute of this 5-minute candle, right? And say that this candle looks like this. It looks great. It looks great. And this is a point that I want to make. I should have made sooner. You need to wait for these candles to close for your confirmation, right? So say I'm getting in and I think I'm getting into my play, whatever this is going to be. I know this is very vague, but say I'm getting in and I see a 5-minute candle looking like this. I'm like, wow, this looks really, really bullish. But there's still 2, 3 minutes left in this candle because this candle could look like this on minute 2, okay? But by minute 5, well, this candle could look like this. Well, I guess not. Hold up. This candle could look like this. So that is the perspective aspect of this because a lot of people will look at something like this and say, oh my God, this candle's really bullish. It's going to continue that way, blah, 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 blah. But you have to understand that that's how the market works. It wants you to think that way so that it can do this and then you're just screwed, right? Because look at this. We have our open here and we have our open here. So this could be the exact same candle. We can push high, creating this high, and then this is what the candle looks like at the end. Because that's the thing that a lot of people don't understand is, well, this candle didn't look like that the whole time. At one point, this candle looked insanely bullish, right? And at one point, this candle looked insanely bearish. But it came back up and changed that direction, started to change that story a little bit, and letting you know that that might not be the way that things are going to end. The story can start one way, but it's not going to end that way, right? So this is something that you really do need to pay attention to because this happens, dude, so often. And this is one of the bigger mistakes that newer traders make, especially when you start to understand candlesticks. And I'll tell you right now, candlesticks are not a strategy, they are a confluence. Okay. They are something that is going to help you out. They are not something that you are going to rely on. Okay. So back to my point on most bearish, most bullish, and least. I can't even speak. I can't even speak. Least bullish to most bullish, and least bearish to most bearish. Now, why is this the most bullish? We all know this because we open, we don't create a low, meaning that sellers literally never step in at all. I mean, there's zero selling pressure to create a low, and there is zero selling pressure because we do not see us sell off of that high. So that is a very, very bullish candle. Once again, we could see a candle like that, and then the next candle could be something like this. It doesn't mean that we are just going to continue higher. That's why it's not a strategy, but it is a confluence. If you're in a trade and you see a candle like that, you have strong confidence that your trade is going to continue in that direction, right? Or inversely, say we are getting towards your TP, right? And we see say we're in calls and we are looking to continue that price action moving up. Well, say you see a candle like this. Well, that might be an idea that you might want to go break even or cut your losses or take your profits because we could be seeing a lot of selling pressure start to step in. And maybe for that play, an example, you don't want that. So that is the way that I would talk and think about kind of the storytelling behind candlesticks. And I really, really do want to hit on this, and I will talk more about this later because it really is a story. So I want to do one more thing before we do jump over to the charts here. So what I'm saying with this whole storytelling thing, okay? Now let's say we have some bearish candles. Let's say we're looking pretty bearish on the day. We see a pattern like this. So bearish candle, we see another bearish candle. And we see something like this. And we see something like this. And we see something like this. Well, what is this story telling me? Okay. A lot of you guys are going to say, I don't know. And that's fine. But what this story is telling me is that we have a lot of selling pressure, massive selling pressure. Okay. Then we have a good bit of selling pressure, really strong selling pressure. Then we get down here, we're saying, okay, now we're seeing a little bit of indecision. We're starting to get bought up just a little bit. Of course, we're still very bullish or bearish in this moment. Okay. Then we get to a point where we are still pretty bearish, but we are starting to see these wicks. And what do these wicks tell you? Okay, what does every single one of these wicks tell you? Right here. This is where buyers are starting to step in. Okay. This area with these wicks is showing you that buyers are stepping in, or else we would just have a close like this. So there was no buyers at the low here. There was no buyers at the low here, but there's a bunch of buyers at the lows right here. So that can start to form your demand zone. Okay. And then you might get something like this. So you might get a candle like that. And then you know what? The next candle might look like this. Okay. I know my green candle's dying, or my green marker's dying out on me. But that is what that could look like, right? And I'll outline this because I know you can't see it at all. But let's just say that these are your bullish candles right here. And you might say, well, how do I know that? Blah, blah, blah. You know what? That makes no sense. Look at where the buyers are starting to step in, and then we can go ahead and pair this with other things that we'll talk about, like, a pattern of some sort, or say that we are down and this is the golden zone, letting you know that we are probably going to get bought up out of that range. Or say that we have a prior high back here, right? And we have that lining up with this zone where buyers are stepping back in, and we know the buyers have stepped in before, so we could expect a move off of this. So that is how you tell that story, because when you start seeing things like this, people are just going to say, oh, we're chopping, the move's dying out, blah, blah, blah. Well, it's dying out for a reason, because it might want to reverse. Okay. Now, that doesn't mean that we can't have candles like this and then we just continue downwards. That's going to happen. It will. But if you're looking for something like us bouncing out of the golden zone, or us bouncing off of prior support, or whatever it's going to be, that is a really good way to tell that story through our candlesticks. So I'm going to go ahead and jump back onto the chart and show you guys a little bit about how this actually works in, real life, right? So let's go ahead and do that. Okay, so let's go ahead and talk a little bit about this storytelling deal while taking a look at some candles. So, I first want to talk about where we have our yesterday's highs, and this is today's chart, by the way. So, taking a look here on the 3 minute time frame, this is a time frame that I do prefer. I like the 2, the 3, and the 5 minute time frame when I am day trading. So, keep that in mind. I like to shuffle between, and of course, candles are going to look different on every single time frame. So, it is very important to be switching through those time frames or stick with one time frame specifically. Okay, whether that's going to be your 2 minute, your 3 minute, your 5 minute, 15 minute, whatever. Pick something, stick to it, or at least be open to a difference in change between your 2, your 3, your 5, your 15, your 30, your 1 hour, everything. Okay, so taking a look, you guys can see something right here that I personally already see, and that is when we come up to these yesterday highs, where we already know that there is probably going to be some good resistance because that is the high of yesterday. We couldn't break that level, so we can assume that there is going to be some resistance there. Now, of course, since then we have broken that, but taking a look here, look at these candles. What do these wicks tell us right here? Yes, we have a very bullish candle right here, but selling pressure steps in right here. Now, what happens on the next candle? We see selling pressure step in and we push down. What can we expect to come after that? More selling pressure. And that is exactly what we get. Now, today was very, very choppy. And this is another reason that you do have to combine this kind of stuff with other confluences. Like, for example, there is a fair value gap right here that we see where I wouldn't have taken this trade because we have other ideas out there. And that is why we get this bounce out of it, but we inevitably do flush back through. So the point that I'm trying to make is it is very, very important to read these like a story and not just understand these and just forget about it, because a lot of people don't really pay attention to candlesticks or understand why they move the way that they do. And when you see a candlestick move a certain way, what is possible or likely to come from that. So much like my example from a few minutes earlier, what can we see happens here? We see a lot of selling pressure right here, but then we see buyers step in at this level. Like, look at this: buyer, 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 buyer. We're moving out of this. So, what happens when we come back down into the zone where we saw a bunch of buyers right here? Well, this is an area where I may have looked to take an entry. Obviously, I wouldn't here because there's not much, to go off of. But hypothetically, you could have taken the entry out of the zone because buyers are stepping in, and looked what happens. I mean, you could have played this all the way up through those yesterday highs. So that is a very, very good and important point to make, because yes, we look very, very bearish here, right? A lot of people would continue to think that we may sell off down here, but we see buyers have stepped in here. So we can assume that buyers step in here. And when they do, we are able to draw out this demand zone right here where we know buyers are here, buyers are here. So when we come back down into the zone, what is going to happen? Well, we're realistically going to see more buyers. And that is exactly what happens when we push up off of that. Much of the same right here, where if we have, selling pressure, essentially this whole range right here, you could have said, okay, once we sell out of here, I'm going to take a sell from here as a scalp. Once we come up into this range, I'm going to put my stop loss at yesterday's highs and see if we can get back down, right? And realistically, you would have played it back down to where the buyer stepped in back here, right? So we make this high, we see the rejection, we see where buyers step back in, we can get in off of a second rejection and play it back down to where buyers step in. And this time, of course, we do sell through that. It's not saying that they're going to step in every time, but you guys can see, look, we get back down, buyers step in, buyers step in, buyers step in, but sellers win. Okay. So the story is always going to have a winner. You're going to see the market go in one direction or the other. Of course, we'll have chop, and this is some pretty bad chop. This is nothing that I would ever trade. Okay. But when you see something like this, you need to understand who is in control. Okay. And is that control starting to slip? So look, buyers are in massive control right here. There's no question about that. I mean, there's zero question. Look, about the most bullish candle that you can see, about the most bullish candle that you can see, about the most bullish candle that you can see, about the most bullish candle that you can see. Then we start to see some selling. And of course, we see small bits, small bits, small bits. But then we see this sell off right here. So we could get an idea that once we do come back up to the zone, after seeing all of this buying pressure, well, sellers were able to sell this off pretty damn quickly. So when we come back up again, I assume that the same would happen, right? That is exactly what happens. We sell off a little bit. So that is what I would recommend taking a look at and understanding, because people really do neglect this. And I hate it. I hate that people neglect this because it really is a strategy in itself. Like I said, don't use this as a strategy in itself, but it can be used in that manner when you do pair it with other things like your fair value gaps, like your liquidity sweeps, yada 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 yada. Because look at this. We'll talk about this in I not tomorrow's video, not the video after, but let's see, on Friday we'll talk about liquidity. Well, this is a liquidity sweep right here where we sweep yesterday's highs right here, and once we sweep these highs, well, we are also getting some selling pressure. So we could assume that we do come back down and try and find liquidity below these lows or below these lows, and you could have taken an easy scalp. So pairing that with other things and ideas is going to help you out. Now, additionally, we were able to take this play this morning for orb, right? And we were able to take this play because we see a lot of selling pressure, or you see a good bit of selling pressure, but overall we're looking very, very bullish. And we see that we break over this high where we did see some selling pressure prior. So we have seen selling pressure really here, and we have seen some selling pressure here. Now, once we break this, right, and we start to move off of this, this is where we get our entry, and we go ahead and enter right here. Okay. And I wanted to see yesterday's highs. Now, we never ended up getting that. I ended up taking profits a little bit earlier. We ended up taking profits before we even maxed out right here. But that was still a great trade. And what were we doing once we did get up to this zone right here? Well, once we got up to this second blue box, we were going break even. So we didn't lose anything on this trade because what do we see up here? Well, there's selling pressure. So I would not be surprised if we do sell off from there and come back down. So I'm going to protect myself against that. So those are the little mind games that you have to play with that kind of stuff. And I really do want to start to jump into some chart patterns. So that is what I would look at for your storytelling through candlesticks. Now let's go ahead and jump over and take a look at some chart patterns where you guys can start to kind of see the macro storytelling behind stuff like this. And I'll really break this down for you because I have a lot of great examples. Another quick tip for you guys, if you have any questions on candlesticks, candle patterns, or on chart patterns, look it up. On Google, there are amazing resources where you guys can see every single chart pattern. And I'm going to use some of these because I don't feel like drawing it out. These are very, very good resources to use. So make sure you're using them. Now, continuing on with candlestick patterns here. Now, this is where that storytelling is going to start to make a little bit more sense. But there are a few exceptions to that. That is why this is very, very important. So you guys can see first we have a bullish engulfing. Why does this make sense? Very clearly. Well, buyers were able to buy up and overtake sellers on their last candle. So you guys can see we have these buyers step in and overtake this last candle, proving that buyers are now in demand. We can expect price to continue in that direction. Same with a bearish engulfing, just the complete opposite. Sellers were able to step in and take over those buyers and step into control and drive the price lower. Now, what can we expect? Price to continue in that direction. Much of the same with the bullish hammer and the bearish hammer, like we talked about. What can we see here? Well, we sold off at the beginning of the candle, or sold off at the beginning of this candle, but then we saw price get bought up and we saw buyers step in with great strength. So what can we expect? Price to continue in that direction. Same with the bearish hammer. We are seeing a price move up in the beginning of this candle. Then we are seeing it get sold off to the point where sellers are clearly in control. And we can see that most likely we will continue down. Now, Hanging Man, Shooting Star, and this one right here is Piercing Line. I've never cared for any of these. I'm not a huge fan. The Hangman's kind of decent, but I don't do too much of that. Okay, I don't do too much of these. Those I'm not too big on. Now, something that I am big on is the Morning Star, Evening Star, Doji Candle, Gravestone Doji. All of these are very, very useful if you are using them correctly. Now, the Morning Star, this is one that is a very useful candle, and the Evening Star as well. Because what are we able to see here? This is another part of that storytelling. Well, we see sellers are in a large control right here, but once we do get down here, we see some indecision. What is this indecision telling us? Well, this indecision is telling us that neither buyers or sellers are in control right now. They're in that fight where one of them can't push the candle in either direction, really. So that is showing a bit of confusion, indecision, and that is also showing you that we could be seeing a reversal coming from that because we saw sellers push it down. Well, now we're seeing those buyers step in, forcing that indecision. From there, we could see buyers win, we could see sellers win. So you have to be open to both sides, but that is something that is going to indicate to you that we might start seeing a little bit of a reversal or a change in structure, or price action might completely flip in the opposite direction. Same with the Evening Star. That is something where we push up, then we see that indecision at the top that sellers start to step in, and we could see it push down after that because there was that indecision. Sellers weren't there. Now they are there. What are buyers going to do? Are they going to continue to drive the price up or not? If it's or not, we're going to push down, right? So understanding that kind of stuff is huge. The doji candle, the gravestone doji, the dragonfly doji are all of this stuff can be used in the correct way, but also don't rely on it, if that makes sense. So don't rely on that, because we can go down here, and I mean, we could find an area where it doesn't exactly work. So like right here, where we see, let's see, what do we got here? 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 What do we got? Let's see. So like even here, like say this is a pretty bullish candle for the most part. This candle right here, but then we sell off after that. Okay, well, that could be some indecision after we push up from this candle. Then we start seeing selling come in. Then we start seeing selling come in. Then we start seeing selling come in. And then we start seeing selling come in and push us down. So it's not always going to work, but you have to have that understanding, because it's more of when you're in the plays. Okay, so when you're in the plays, you have a good understanding of what's going on. And like, for example, here is a pretty good example of a bullish engulfing candle. So we see this bullish engulfing where the body opens and closes, encapsulating that whole prior candle, right? The whole body of that prior candle. Also here, we could see this is a pretty bullish looking candle, but this candle isn't looking too bullish. So that could be an area where, yes, you may guess wrong, or you may have a little bit of a different idea here. But then here's your doji candle or your morning star or whatever you want to call it, where you come up with bullish price action, you see that indecision, and then you sell off. So there is good examples all across the board. Like I said, it's not going to work out every single time, but when it does, or when there are opportunities for you to find that reasoning to stay in a play, to exit a play, to get into a play, whatever it's going to be, you want to make sure that you have that understanding so you are more comfortable in your plays. Now, jumping into chart patterns, we are first going to identify a continuation pattern and then a reversal pattern. So we'll first focus on continuation patterns, but I do want to note that this can be used on any single time frame. For options, I would recommend a 3, 5, 15-minute time frame. On long terms, I would recommend a 4-hour, daily, weekly, and even monthly if you need to, but really these can be used on any single time frame. But you do need to understand these and understand, once again, the storytelling behind these. So with our bullish ascending triangle, why does this make sense? Well, we see a large move up, then we see some resistance here, right? We see that we cannot break this level. We also see that we cannot break this level here. So once we do break this level, there are not many sellers above that, meaning that we have a lot of room to continue higher. Continuation pattern, continue higher. Now, same with this bullish wedge, the bullish flag, and the symmetrical triangle, and really all of these bullish ones, in the continuation patterns, we are seeing accumulation. Okay, it's not that the move is dying. It could be, right, but for the most part, you are seeing an area where people are accumulating. Right, we are buying more shares or options in this zone, or they are trying to chop people up so they get out. Those people being the market makers, they're trying to chop that up so you do get out, or theta eats up your contracts or whatever. So you have to be very, very aware of both sides of that. If you're in this play and you see we push all the way up, and then you see we start moving down into this ascending triangle, well, if I'm in options, I may cut my position and look for a reentry. I might take profits, then look for a reentry on the break of that ascending triangle, because I don't want theta to eat me up. But if I'm on futures, okay, I know that there is no theta, so I can wait around and let this play out and really see a move higher, much like with this wedge and with this flag. We are seeing accumulation in these zones, and once we are able to break this zone, we can target the high of this initial high right here, and then onward, and much of the same with the symmetrical triangle here. So that is a great, great way to look at it. And I would really, really highly recommend using that storytelling aspect, or at least perspective, to really help you out with this, because I'll show you guys some examples and I'll show you guys how to compare this. But personally, I like to use these most on long terms. Whenever you see them on options, or intraday or futures, 100% they're still very valid. But I'm telling you, I like to take them more on long terms, because you'd be surprised how many times we see a very bullish setup. Like, say we have an ascending triangle right here, and say we're right at the peak, right about to break out. You would be surprised how many times we get a massive catalyst right at that point, right? Or coming up on the breakout of this flag, we get a massive catalyst, an earnings beat, or something like that. And then the bearish is the complete opposite. It's the complete opposite. We really don't need to talk about it. Now, with reversals, this is a really, really important one. And this is one that you will see more and more on your options than you will on your long terms. Things like your double bottom and your double top. Well, what does this tell us? Well, we come down, we make this low, and then we see buyers step in and push us up. Well, when we come back down, we see buyers do the exact same thing, letting you know that sellers are not winning this level. Buyers are staying put. They are actually sitting there and saying, "You are not going any lower, and we are going to push the price back up." So from there, we see us push higher. And same with the triple bottom. That is even more confluence to let you know that buyers are not going to give up this level. So we're going to push it back up. And you see this little range here, but once you break that range, then you can look for your good entry. Also, with bearish and bullish, it is exactly the same, just the complete opposite, right? So then we have inverted head and shoulders. This is a great strategy, or great chart pattern, where you see we sell off, we get bought up, we do sweep these lows. And once again, when we talk about liquidity, that kind of makes a little bit more sense of this head and shoulder pattern. But then from there, we break back into this range, and then we see buyers step back in. Okay, and then we can take that entry off the break of that range. Now, the falling wedge and the rising wedge, I don't use too much. That's more of a trend line thing, but it is still very useful. In my opinion, I am a much bigger fan of these three strategies or patterns right here. And then I am a big fan of all of these right here. So I would really take into account what this means, okay? Because you need to think about it in a way that isn't like everybody else, a way where people are like, okay, it looks like this, that means it's bullish. Well, yes, but no. Okay, you have to understand why. For long terms, am I consolidating because I'm waiting for a catalyst for earnings? Is there something that needs to be figured out, or is there a reason that we are going to be seeing a bullish move higher? Or if I am in options long terms, or sorry, if I am options futures or just intraday trading or whatever, can I identify a zone where we are actually making that move higher or looking like we will make that move higher? So, for example, let's say price action was pretty bad today. But let's go ahead and try and find a quick little flagging formation of some sort. Oh, here you go. So here's a double top that we took the other day. Here's a double top that we took the other day. Look at this. And we were able to get a great entry on this. Okay, so we see this double top. Okay, large move up. Then we come back up to the zone and we press down. So what are we able to do? Well, we are able to identify this prior double top, right? And what are we able to do? We're able to get an entry off of other confluences, things like our fair value gaps, things like our liquidity sweeps, yada. And we are able to take this entry off of the 1 minute fair value gap that was somewhere around here. And we play it back down to these lows where we know buyers come in, but then they don't. So that is where we go break even. Then we play it all the way down. And I remember that we did have to trim right around this area with us coming back up to our EMAs, but still an amazing play right there. And simply off of a chart pattern like our double top paired with other things like fair value gaps or some liquidity sweeps or whatever that is going to be. But I want to show you guys a few examples because on the daily and the weekly time frame, I really do like to look at my long-term stocks and take a look at some chart patterns. So here is Nebius on the weekly time frame. And Nebius not only has great financials, right? But they have a great setup, right? So I want to show you what Nebius looks like. Then I want to show you what happens when something like this plays out. Okay. So we are able to identify this as one of those wedging, flagging formations, right? Because we can see we make this new high, then we come back and we consolidate in this range, right? And buyers are not giving up this level right here. So we are seeing a push higher. Well, what is going to happen to Nebius as their financials continue to grow? Well, this is what it could look like. This is BE, and you can see a very similar wedging pattern. We see this large move up, then we see us wedge and consolidate. Well, once we break that wedge, we absolutely explode higher, okay? So that is something that you need to be paying attention to, especially when you pair that with things like Nebius and BE growing their revenues at insane rates, okay? Other things like, let's even go to EOS here. So EOS is flagging on the monthly time frame, right? So this is your flag right here. We create a new high, then we come back down and we are flagging, okay? So it's not the prettiest thing ever, and it doesn't have to be, okay? But we are flagging, we come back down into our buy zone, right? And we are able to see that we are clearly flagging. Once again, pair this with things like EOS growing their revenue, free cash flow, and EPS by 1,000% between 2024 and 2028. Now take a look at CoreWeave. CoreWeave is another one. This is a great flagging formation. Another stock that is absolutely killing it on their financials. So we could see them continue higher off of this. Once we do break this zone and continue higher, that is where we are looking for our entry. And we've already gotten our entry because we know that their financials are amazing. But once we see this move actually get going, we can go ahead and take things like options. We can go ahead and take things like more shares or whatever it's going to be, things like cash secured puts. That is where you really can develop your strategy and find out whatever kind of investor you are going to find a way to capitalize on the market. Now, I have a few more points that I want to wrap up before we do go ahead and head out. But I first want to say, These videos are so fun to make. I mean, I really do have a blast, and I really do hope that we are able to hit 75 likes on this video so I can give away another free eval and another free premium membership. And once again, all you guys have to do to get access to that giveaway and get entered into that giveaway is drop a like, help out with that journey to 75 likes, join up on the free Discord, which is linked in bio, and join up on our live trading stream, which is going to be tomorrow at market open, 8:30 Central Time. So that is all you guys need to do to enter that giveaway. I want to wrap this up by talking about one more thing, and that is just thinking differently from the market. Now, I've talked to you guys about this whole storytelling thing, okay? And hopefully you guys are able to grasp what I'm really talking about, because this is going to set you aside from the rest of the market. You know, you want to be on the smart money side of things. You don't want to be on the dumb money. You don't want to be entering where your friends are entering or where you know other retail traders are entering, because what do we know? Retail traders suck at trading, okay? They suck at trading. So you do not want to be with that crowd. You want to be with the crowd of winners, the crowd of smart money traders, because we know smart money is taking the dumb money. So you do not want to be on the side of the dumb money, right? So I want to run you guys through one more scenario here, and this is kind of where you guys can look for your actual entries so that you guys can get a better entry on what you are looking for. So there are a few options, and we're going to be looking at an example here on a bullish flag. Now, what I would recommend is letting this flag play out until you have at least 3 touch points on the top. So 1 touch point, 2 touch points, 3 touch points. Now, once we see that and once we have created these lows, I would be looking for a possible buy out of these lows. I don't know why my transparency is like that, but I'd be looking for a buy out of these lows because I can establish that this is some sort of demand zone where buyers are stepping in at this level. So I might look for an entry right here, get that entry right here once we do see that little bit of a bounce, and then I can play this up really to the top right here. And once we break that, then we can go ahead and take that for the rest of the play. Now, what I would recommend is if you're going to do something like this, go break even at the top right here. So if we do get something like this where we sell off and then maybe we, just get faked out, because that's going to happen. Say something like this. Well, you're break even. So you just break even on the trade. You don't lose anything. You don't make anything. And that is a lot better than obviously losing things. So don't do that. And then what I'd recommend is with your stop loss, just put it right below, because another thing that can happen is we can come down and, well, really it would look something like this. And we'll talk about this once again with liquidity sweeps, but you'll see this a lot, okay? A lot. You will see it come down and sweep this lows because look, all of those dumb money traders that entered here, which with good entries, right? Good entries, okay? Pretty good entries, right? All of the people that entered here, well, they just got stopped out. So what I'm talking about with thinking against the crowd is, well, they just got stopped out. So what are you going to do? They got stopped out. You're going to look for your entry, okay? Because where they are all selling and you're buying, smart money's going to buy that up. And of course, once again, not going to be the same every time. Not going to be the same every time. But when you are seeing a sweep like that, and we'll talk about the liquidity sweeps, but when you see a sweep like this, you can see price continue up much faster, because what happens to those dumb money traders, those traders who are newer to the game? Well, they get emotional and they see, oh my God, I just got stopped out and then we're going to move back up. So I'm going to jump back into this trade. Okay. Then that pushes your entry even higher. We know that smart money is looking to sweep these people out, get all those entries, and then let those people drive their play up. That should make perfect sense. And I really want to drive that in. They want you to be making the money for them. Okay. So they're going to take all your money, right? They're going to take all your money. They're going to sweep these lows. They're going to hit your stop loss and you are going to be out. Well, they took your stop loss and they got their entry. Then when you see the price going back up, you're going to jump back in. And when you jump back in, you're adding that liquidity back and driving the price higher, making them money. Yes, you might be winning too, but that's after the loss. And that also means that you're emotionally trading, probably oversizing and over trading in general, getting back into a play 2 seconds after you just got swept out. So that is a big, big thing that you need to pay attention to. And once again, it's going to be different every single time. So pay attention to it. Start to understand and jot down what happens in scenario A, what happens in scenario B, what happens when it looks like this, what happens when it looks like that. Because it's going to be different, you have to start to put all of that data into your head and start to remember it and be like, oh, when it looked like this last time, it did this. But when it looked like that the time before, it did this. Okay. Because it's going to be different, you have to be open and understanding of the possibilities. You're not going to be able to push the market where you want it to go. The market is going to go where it wants to go, and you have two options. You can either fight it or you can run with it. Okay. You're not going to be pushing the market where you want to. The market has over $30 trillion in it. If you think that you have any sum of impact, you are sorely mistaken. I'm sorry, but Us individually mean zero to the market. Zero, 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 zero. Okay. But you add all these traders up over time, you add all the market makers. That is what actually forms this liquidity. And we all work together to make that. Whether that's we all work together to make these market makers more money because we all have bad entries as retail traders, or you can become part of that smart money, read these candlesticks and patterns as a story, and start to capitalize on the losses of the people who didn't do their research or don't have an understanding of the market or whatever. Because personally, I don't feel bad about that. I was able to take the time to learn the market, and so are you. If you are here 35, 40 minutes into the video, you have taken your time to learn, so you now understand you deserve the right to go take that money from people. Okay, those people who did not do their research, who do not have an understanding of the market, they're going to lose anyways. So why would I let smart money, or why would I let JP Morgan take their money? Why wouldn't it be me? But that's really all I have in today's video. We are about 40 minutes into it. So I thank you guys for continuing to watch and stay active. I'm very, very happy to see every single one of you guys making it to the end of this video, showing that you guys are wanting and looking to get better and actually taking the time to get better. So I hope that you guys were able to get some good notes written down. I would really highly recommend to go back, take screenshots, write things down, really make sure that you are getting that information drilled into your head, because you don't want to be forgetting this. You don't want to have to come back and watch this video 10 more times. I understand. Write it down, remember it, don't forget it, and use it. Okay. Go to your charts after you watch this video. Go and look and see if you can identify some bearish flags, some bullish flags. If you can identify times where, sellers are getting weaker and we are seeing buyers start to step in, and then you see a reversal, right? Start to understand those things, because the more repetition, the more eyes that you have on things, the better you are going to get over time. And it's not going to happen in one day. It's not going to happen in one week. You're not just going to get better tomorrow. But if you do continue this process of getting 1% better every single day, like we have talked about, you will start to grow your game, and inevitably you will start to see profitability come from that. Now, that is all I have in today's video. I'm going to see you guys tomorrow for market structure, where we are going to break down when it is a good time to trade, when it is a bad time to trade, how to understand when it is that good time and when it is that bad time, and also understand what it looks like for a healthy market to be playing out for both long terms and, most importantly, futures. So that is all I have for you guys. Remember, 75 likes on this video, we'll be doing another eval and free premium membership giveaway. All you guys have to do is click the first link in the description down below and join up on our live trades tomorrow morning at market open. I will see you guys there. Make sure you guys check out everything else that we have. Go back, watch the first episode, whatever you need to, but continue your learning, keep getting better. It was amazing to see you guys today, and I cannot wait to see you guys tomorrow. So deuces.